All right, let's break down Huron Consulting Group's second quarter earnings for 2025. The company dropped their numbers after the market closed, and wow, Wall Street definitely sat up and paid attention. We're going to dig into the key numbers, what management is saying, and what it all means for the stock.
And you can see that reaction right here. The day after the earnings release, the stock shot up, closing with a nearly 6% pop. That's a really strong vote of confidence from investors.
So the big question is, what exactly sparked that rally? It really wasn't just one single thing. It was a perfect storm of a solid earnings beat, management raising their guidance for the future, and a really compelling story about where the company is headed. Let's get into the details.
First things first, the headline number. Huron delivered adjusted earnings per share of $1.89. Now, the analysts on Wall Street were expecting $1.79, so that's a 5.6% beat. Pretty solid. It shows they're executing really well right now.
Okay, but here's where it gets interesting. Look at the difference between the official number, the GAAP EPS, and that adjusted number we just talked about. GAAP came in way lower, at just $1.09. So, what's with the huge gap? This is where you find the real story.
Well, the culprit was this one-time non-cash impairment charge of $8.2 million. So management basically said, hey, this is a one-off accounting thing. It has nothing to do with our core business. They argue that the adjusted number, the 189, is the one that really reflects how much cash the business is generating. And judging by the stock's reaction, the market totally agreed with them.
And it wasn't just about earnings either. The top line, their revenue, hit an all-time record. $411.8 million. That's the first time they've ever broken that $400 million ceiling in a quarter, and it represents a really healthy 8% growth over last year.
So where did all that record-breaking revenue come from? The cool thing is, they saw growth across all three of their business segments. Healthcare is still the biggest piece of the pie, making up about 49%. Education is next at 32%, and then you have their fast-growing commercial segment at 19%. Let's take a quick look at each one.
The healthcare business put up a solid 6% organic growth. A big driver here is something management kept mentioning on their call, the One Big Beautiful Bill Act. It's new legislation that's basically forcing hospitals to get their financial houses in order, which means they're calling Huron for help. Now, one interesting note, management did say there was a bit of a temporary pause on some of the bigger multi-year digital projects as clients get their immediate finances stable first.
Now, let's jump over to education. This segment had a fantastic quarter, another record for them, with 5% growth. With all the uncertainty around college funding and enrollment these days, universities are turning to Huron for just about everything, from operational strategy to fundraising, and it's paying off. They're seeing record sales conversions.
The real star of the show this quarter, it had to be the commercial segment. Revenue here just exploded, up 28%. A chunk of that came from their recent acquisition of OXIA, but it was also driven by really strong organic demand for their digital and efficiency services as companies all over the world try to navigate this crazy economy.
All this great performance across the board gave management the confidence to do something investors absolutely love to see. They raised their full-year guidance for both revenue and earnings. Raising guidance is one of the clearest bullish signals a company can possibly send. It was a huge factor in the stock's big move.
And that confidence is also being fueled by their M&A strategy. Huron has been making these really smart, targeted tuck-in acquisitions. You've got Treliant in financial services, Eclipse Insights in healthcare. These aren't giant deals. They're designed to strategically add specific, high-value skills and deepen their expertise in key areas.
So what does this all mean for the bottom line? Well, these new companies are going to add about $20 million in revenue just in the second half of this year. But the bigger story, the one to watch, is that after some upfront integration costs in 2025, they're expected to be accretive to earnings per share in 2026. That just means they'll start adding to profits, creating a clear runway for future growth.
So looking ahead, here are the key things you should be watching. The third quarter results will be our first real peek at how these new acquisitions are contributing. Then, throughout the rest of the year, we'll be listening for updates on how the integration is going. And of course, the big one is 2026, when that earnings accretion is really set to kick in.
So that brings us to our next call segment. We're assigning an equity research style rating of outperform on Huron. You've got a strong quarter, you have a significant guidance raise, a smart acquisition strategy, and clear tailwinds in their markets. It all points to a company that's positioned to keep on winning.
Okay, so that's the analysis. Now for the fun part. With this bullish setup, what's the trade? How could you position yourself to take advantage of this momentum?
Let's talk about an idea we're calling the cyclical rebound healthcare digital cost spread. The thesis here is pretty simple. We believe management is right that the pause in those big healthcare digital deals is just temporary. Once hospitals get their finances back on solid ground, they have to get back to those tech projects. The play is to buy the January 2027 150-170 call spread. This gives us plenty of time for that digital spending to rebound and for the recent acquisitions to start boosting the bottom line. And the catalysts? Any news that those big digital contracts are starting to get signed again, that could send the stock significantly higher.
And of course, as always, we have to say it, this is not financial advice. Please be sure to do your own research before making any investment decisions. Thanks for tuning into this breakdown.